everybody. Happy New Year. Woo! I love when that happens. This is like my fifth one. Welcome to Sweatpants and Strategy. I am your host, Dana Hershkowitz, and today is the year-end wrap-up. So we are going to be discussing trends, challenges, shifting, and everything SBA. And on my panel are three new guests, never been on the show, which I'm also excited about. So we have Ken Rosenthal, who is the very first person, I believe, that I met in SBA. And it's so funny when, we first met, I followed him around like a little puppy. And he taught me everything. And Ken, thank you for that. And I also have Sexton, who is an EVP over at Phoenix Lender Services. And finally, we have Mitch Fogel, who is the partner over at Fogel Law Group. So let's dive right in and talk everything SBA. Thank you, guys. Hi, everybody. Mitch,
Hello.
Ken, Lance. Thank you guys for being on my year-end. And Happy New Year. And I'm so excited about this podcast. And we're going to be talking everything SBA from challenges, trends. And I know we kind of talked about questions, from the beginning. So I thought we would jump right in. So if an AI underwriting assistant showed up tomorrow, what part of the process would you think it would change first? And honestly, would lenders trust it? So before you guys answer, here are a couple of statistics. As of 2025, around 83% of lenders plan to increase their AI tools leading into 2026. Some institutions report that AI-based underwriting can reduce loan approval around times from weeks to minutes, even under 15 minutes. So those are a couple of statistics that I found. So what do you guys think about that?
I'll jump in. I'm an old man, so AI is kind of an interesting topic for me, but I do believe that AI can improve efficiencies in underwriting significantly. Just recently, SBA says if you're a PLP lender, you have to process all your loans PLP. And the biggest concern every lender has, am I making an eligible SBA loan? Well, AI can take all the information in the SOP and help a participant lender vet out eligibility really well. And the other thing that I see, the credit memorandum has so many places in it that AI could do better
Right.
than credit underwriters, not taking anything away from my underwriter friends, but like industry analysis. You have underwriters that spend a lot of time researching an industry. AI can craft an industry analysis that can be copied and pasted into a credit memo and take what might be a 2 hour process and make it 2 minutes. So I do see significant efficiencies in getting a loan to the point of approval. And I also see increased compliance because AI has the ability to look at all the SBA regs and the SOP and help a lender make an eligibility determination.
Ken, what do you think?
First of all, I'd like to say Melikliki Maka and Haole Makihiki Ho. So I end for Merry Christmas and Happy New Year.
Hey, Merry Christmas and Happy New Year.
I'm not as old as Lance, but, and I agree with what he's saying. I do say that human beings are critically important
They
in the
are.
underwriting process.
I agree with you on that.
AI can help a lot with the narrative.
Yeah.
AI and technology can help with maybe data entry. Analysis of the data that's entered, I think, is where the humans come in. And I give you an example. A few weeks ago, I actually got a deal from a guy who's very active using AI. I did my analysis in a couple hours, going back and forth with questions that AI may or may not have been able to
interpret from the numbers. And it got to a result, LOI out same day. And I'm like, could AI have done that? Probably not,
I don't
because
think so.
it was the interpretation of the numbers that takes the human being. So AI is a very valuable tool in addition to the human beings that actually make the decision. From what Lance was talking about, 100% agree. The narrative, that's really where it comes into play. So can it speed up? Yes. Can it take the place of? No.
When I attended NAGLE, there was 4 AI companies, SBA companies, selling a product, which I was shocked. Like I didn't even think about how AI affects SBA, but when there's 4 different models, like what is that? Like how do you if they're are they selling the same thing, or is it like I feel like AI is just AI. Why was there 4 people there? Like what is that?
Well, there's different types of AI. Proof of that is,
Oh yeah.
Google has one, you know, Meta has another, and there's a million other options. So I'll put my lawyer hat on. This is a lawyer hat for a second. And I'll give you my 2 cents.
Please.
So essentially, you're looking at 3 guys here who are all 60 years old or over, who have done this forever.
Yeah.
And if AI is the answer, then Lance, Ken, I'll see you guys at the beach. I'll bring the chairs. You
All
bring the
right.
rum. We're done. There's
That's
no
not no.
there's no need for no,
Yeah.
that's my point. There's no need for experience, right? So you're basically saying, you're not saying it, but if you were to go down the road of AI being the ultimate solution for this, all the life experience, all the value of all the deals that Ken's done and Lance has looked at and Fogel's done wouldn't really amount to a whole mess of beans. And so that's the difference. Will it speed it up? Sure. Data entry? Absolutely. It's a beautiful thing. But at the end of the day, who's going to be the lender who basically, when confronted by the SBA with a deal that went bad and said, well, blame it on Google. I used their AI, pay me my guarantee. And the SBA is going to say, no, I don't think that works that way, Mitch. So you have to have some good old-fashioned life experience built into all these things. Because at the end of the day, a lot of the decisions that we all make are based upon our trips around the sun, right? I mean, how many times have we seen
Experiences.
this
Yeah, I get it.
before? What can you anticipate in a deal that's going to go right and go wrong? It's one of those things, and I know with the younger people that come work for me, and I'm sure Lance and Ken have seen that in their lives, where they come in and some of them come in all charged up with the latest and greatest technology and AI being at the top of their minds right now. And they just don't know what's going to happen next. And we can look at a deal and see 5 steps down the road what's going to happen.
Yeah.
Whether this guarantor is going to make it, whether this seller is really legit, the little nuance of things that you pick up with things that are said and not said in an email or on a phone call. There's no way that AI is ever going to be able to add that value. And that's the difference between a successful lending program and portfolio and an unsuccessful one. Because let's say if 80/20 is your rule, and it's predominantly the rule of things in life, it seems, 80% of the deals you're going to do are going to turn out to be right with the way you thought they were going to be, and they're great, but the other 20 aren't. And it doesn't take many of those other 20 to take your program and mess it up badly and basically knock you out of having a law firm, or knock you out of doing SBA lending or even conventional lending. So I agree with Lance and I agree with Ken in that it's got value, but I think the value is going to reach a certain potential, and that's all it's ever going to be, because you can't substitute what experience can bring, and only human beings can process that information intuitively. And at least that I can tell over the next, many, many years until we're all out of this business, how it's going to work.
One of the things that Mitch said that's fun is getting the guarantee purchase. We all do SBA lending. We wouldn't go through all this junk these extra steps, all these requirements if we didn't want the guarantee to be good. And I always get tickled people talk about that, but the UPP currently does not have an AI tab. I love what you said, Mitch, because I would love to be able to go back to SBA on a guaranteed purchase and say, "Oh, not my fault. AI did it." But
Right.
You are
that's
talking about
not currently
7A, by the
there.
way,
Well, but wait,
Do I?
but
just to preface that.
go back to the beginning statistics. Like 85% of lenders plan to increase spending on AI tools. So
Yeah.
I agree with Mitch.
Okay.
I agree
So
with
Dana, you got to twist this. I'm going to do it for your benefit, our
No,
hostess
don't.
of the mostest,
Ay, ay,
that
ay.
in the recruiting
Oh.
phase, you need people that understand SBA lending
Yeah.
and also understand how AI would be used. If
But
they're
wait,
ignorant of either, they're not a good fit.
but
You
wait,
have to
but
do
it goes
both.
back to Mitch what was saying, like, right? You can have a 30-year veteran and there's nothing that's gonna take the place of a human, right?
Right, but
Yeah.
I need to understand how AI, I'm a
That's what
30-year
I'm
veteran.
saying.
I need
Like,
to understand how it can help.
right, so each
Yeah.
company, like when they implement an AI tool, usually there's a learning process, there's steps, but I agree with Mitch where ultimately it's not going to be something where you're going to replace a human, but the bottom line is, do you guys think is it going to be more proficient in the future,
It
or
can increase
is it going to
efficiency.
hurt, or is it going to hurt us?
No, I think it could speed
Oh,
things up. It could increase efficiency. I mean,
Okay.
just
yeah, I
Lance's
think it,
example, the industry analysis that takes 2 hours of research, AI could do that research in
in
minutes.
seconds. Yeah. I think the big thing with AI is, credit memorandums. Let's say an institution takes a week to get a credit memorandum knocked out. Well, if you utilize AI in some aspects, I mean, every financial institution's hesitant to just completely dive in and immerse. I mean,
Right.
I don't see any institution say, "Oh, we're going to let them do our credit memo, let them make the credit decision." AI is kind of like the credit score loan program, and I'm not going to pick on it, but all the credit score lenders have had some difficulty in their portfolio because it basically is a loan that's approved based on one piece of data. I mean, there's other information that goes in, but having SBA compliant credit score doesn't mean the loan's going to work. And what Mitch was talking about and Ken's talking about, we've made thousands of loans. We've seen things that work, things that don't work. Industries like I have a short list of industries that I don't really like right now based on guaranteed purchase and liquidation activity. And I don't keep that information to myself. I share it with everybody on the team. So we try to avoid those loans going forward. So AI is not going to replace credit decisioning, but it can help us get to the point of the decision quicker.
Right.
I agree with that.
So
Actually,
if I may, let me bring up a couple other germane points. First one is garbage in, garbage out.
Yeah.
Okay. So this kind of gets back to Ken's point. If you don't have people familiar with how AI works, then they can have all the knowledge in the world. They can't put in the information. If you don't have people, if you have people that are familiar with how to use AI, and I'm kind of still learning it, old dog, new trick, but you don't have the experience on what to look for and what to put in to the processing, don't trust what you're going to get out of it. So you really have to do both really, really well. But even if you get there, even if you get talented, educated, trained people who know where to find all the little nuggets that you need to put into an AI system that can perfectly work, here's what you get.
but
You get a credit memo, you get a commitment letter, you may get loan documents, okay, depending on how your AI is built out. But you know what you're not going to get? You're not going to get a borrower who knows what they're doing and they're going to be able to move with a sense of urgency and sophistication to get the deal done. You're not going to get a broker who's going to really necessarily know what you need. You're not going to get a seller who's going to be proactive and not be wishy-washy. You're not going to get competent counsel on the buyers and seller side that know how to draft loan documents, operating agreements, trust agreements, closing statements, or anything else. So you can have the best AI ever created, and all you're going to do is end up with something that's a conditional loan approval that meets SBA eligibility requirements conditionally, and then you got to close the loan. So that's where everything else comes in that's really important. And that's kind of my world. I mean, Ken and Lance, those guys are on the front end of that. They're going through all that muck by the time I get the deal. If they've done everything right, and well, I don't care if they've used AI or not, when I get that loan approval and I get that engagement email and I'm ready to go and I can read what I read, I don't care if it's human done or AI done. At the end of the day, it looks like a credit memo or it looks like a commitment letter, and I've got all the due diligence stuff to back it up. If I don't have people in the deal who can do what they need to do, the parties that I listed moments ago, doesn't matter. It's still going to take 30, 45, 60, 90, 120, 180 days, depending on a lot of things. And what I didn't mention before, which I should also mention now, is you still got to get the surveyor to do the survey. You got to get the title company to do the title company work. You got to get the municipal lien search guys and gals to do their job. You got to get the government agencies to, grant your zoning approval or conditional approval, blah, blah, blah. So it's not going to add that much value to the ultimate goal of what SBA lending, which is
It could shrink the time.
money out there. Well, yes.
Yeah.
The 4 months it sits there at the lender before it gets to Fogel Law Group. Yeah, it may tighten that up to 30 days, which is a good thing. Okay. It can be a good thing. But again, if it's garbage in, garbage out, if Ken sends me a deal and he's relying on a staff person who's awesome at, AI, but maybe not as sharp as Ken is with all his life experience, and they're putting stuff in and Ken's relying on them and they send me an approval and I'm working off an approval that's incorrect, you know what? You're gonna get trouble. Now,
I like to say that AI is really good at creation, but not editing.
Yeah.
Fair.
Yeah.
Yeah. I had, if I may also, just one quick thing. So I had a couple of large national companies approach me and say, here's a great solution for your firm. All the contracts you got to read, all the leases you got to read, all the other operating agreements and all the other stuff you got to read that's really long and difficult. Yeah. Okay. Well, we can have you upload that to our AI solution, and within seconds, minutes, you're going to get a synopsis, an assessment, an analysis, pick your term, of what the document is that you uploaded. Didn't that sound great? And I'm like, well, yeah, but I would never in a million years rely upon that. Well, they said, well, why not? And I said, because number one, I have a sense of, responsibility and I know what I'm doing. And the second thing is, I wouldn't put my law license on the line for mistakes that would be created by your product that doesn't necessarily know the things that need to be looked for in a document. I can't rely on that. It's not a solution for me. And they're like, well, what if we were to, work with you on it to make it better? And I said, you can work with me all you want. But at the end of the day, I know what to look for. I can do it expeditiously. I don't need to have some AI solution review a contract and give me an answer as to what it's supposed to look like. It doesn't add any value.
To be fair, there may be a hybrid.
But wait,
Right?
hold on one sec. Ready? But okay, let's go back to my comment about Nagel. These guys were touting AI with different products.
Oh, yeah.
I hear every one of what you're saying. So, right?
Yeah.
So,
None of us are saying it shouldn't be used.
no, I'm not saying it shouldn't be used, but
It definitely will be used.
I get it. I get it. But there's so many, what Mitch said before, there's so many systems. There's so many, one, there's changes, systems. I think really, Mitch, on your end, does it add value from the
Not
bank?
really. Not yet.
Well,
Yeah.
not yet maybe is the right term, because remember, it learns. So it's just like saying, go back 20 years. Technology, is it value? Of course it is, but you have to be able to know how to use it. So Mitch, there may be at some point AI that could help. You're still going to have to, you or your staff going to have to review it.
Yes. The hardest thing, a lot of times the lender will come to me and say, what if we were to do our loan documents internally
Hmm.
instead of you do them?
What do you
Would
think?
that be a big savings in time and expense? And my response to that is no, it wouldn't. And they're like, well, why wouldn't it be? And I'd say because in the experience that I've had with lenders that have done documents internally, I find errors in their documents often. And when they send them to me, I have to review them anyway. Then they go back, then they make changes, then they come to me. And because at the end of the day, it's the Fogel Law Group closing the deal. And if there's a mistake somewhere, they're not going to go to the, loan
Let me
closer.
ask you,
They're going
just
to come to
using what
me.
using that scenario, and maybe AI
Right.
ties into this, but Laser Pro,
Yes.
Yeah.
isn't
Great.
that a technology-driven loan document creation tool that could be used and then you could edit?
So yes, and yes, in fact, we see and the lenders, the very few lenders that we represent, of the lenders represent, the very few of them that use a document preparation software use Laser Pro. There's a couple of variations of Laser Pro. There's nothing wrong with Laser Pro, but like I said moments ago, garbage in, garbage out. It's only as good as the person who knows what they're
Yeah.
doing, putting their information in. If you
I
make a
totally agree.
mistake on one document, you've made a mistake on 42 documents.
Yeah.
And you need somebody who knows what they're doing to find that and identify what it is and correct it. So if you're good at it, so yes, but when you do what I do, as long as I do what I've done, it doesn't take that long to produce a set of customary 7A loan documents and to make them accurate and precise. It still takes time to put those stuff into Laser Pro. It still takes time to review it. It takes an hour process, maybe an hour and 15-minute process, and it makes it a 15 to 20-minute process. So
Wow.
there's a little bit, if it's under a controlled situation by qualified, experienced and data entry people,
I
then
mean, like,
there can be a 45-minute savings, maybe an hour.
is it worth it?
Well,
You
I
know,
think Laser Pro in particular, and Mitch makes a good point. If you're going to utilize Laser Pro, you've got to have somebody that has good experience with Laser Pro. Now, I've worked at 7 different banks in my career. In every bank I worked at, utilized Laser Pro or something similar. And you can't assume somebody that's working in your SBA shop is suddenly going to understand how to use Laser Pro. Dana, I know you do recruitment, but if a institution, SBA lender was going to use Laser Pro on the simpler SBA loans, they're going to have to go out and find somebody at a bank that's been using it for several years that understands how to get the information out. And Mitch mentioned, or Ken or Mitch mentioned garbage in, garbage out. That's exactly right. You've got to have somebody that knows how to use it for it.
And Laser Pro is just an example, but
Yeah.
the whole topic of AI is what goes in comes out, and you have to manage that process.
So,
So
like, all right.
whether we just use that as an example,
yeah.
the whole concept, if you boil it down into a nutshell, is it can help, which is why there's 4 vendors there, maybe speed up parts of the SBA process, 504, 7A, CA, whatever. Is it the end all solution? No, it's just
No.
part of the process.
Thank you. I agree with what you're saying and the perspective of Mitch. And I'm going to kind of like go in towards the next question, which
Okay.
is to staffing, right? So you're
Yes.
talking about hiring people that are proficient with AI, and then you're talking about, I know for like, look, I've been in this 17 years, and what I've seen lately is that there's been, look, a lot of layoffs. Maybe like sometimes there's been banks that want to grow, but the people that are being laid off are, God, that like, what has happened? Like, they've been fantastic people, right?
Yeah.
And part of which, yes, so Fifth Third laid off closers because they developed their own software system that used AI. So that's one example. And then we all know about Bay First, where they got rid of their small business loan program and now, it's non-existent. And is it Benseco? Benseco, right? That has taken over the portfolio. So in conjunction with AI and the changes happening in the SBA this year, I've seen a lot of restructuring, downsizing, everything. Do you agree with me? And what do you think is going to happen in the next couple months?
Well, Dana, I think this opportunity helps the strong SBA lenders become stronger. And the reason I say that, I've become aware of several SBA professionals that are looking for opportunities right now.
But there's so many though.
Yeah.
For my job, it's like hurtful, harmful, or whatever.
Yeah.
But there's
But
so
I
many
also
out
think I'm sorry. I also think the quality of people that are out there, you're not having to look at somebody that doesn't know what SBA stands for.
there.
There are seasoned veterans that are out looking for opportunities right now, and a strong SBA lending institution has the opportunity to even further deepen and strengthen their lending team with some of the people that are available now. And I mean, over my 40-year history in SBA, this is not the first time I've seen restructures and people starting or stopping SBA lending divisions. But I think SBA lenders that are in good shape have to look at this as an opportunity. Do I have a key area where I need a strong person to come in and help us with our SBA lending team? So, I mean, I see these restructures, these people that are out looking for opportunities. I see it as an opportunity for an SBA participant lender to strengthen their team.
I agree with you. And I love doing statistics because it's just like thought-provoking. So when I did my research, so in the first 9 months of 2025, institutions, meaning, banks and credit unions, have shed 13,000 jobs, roughly contributed like 2,900 just through job cuts, and the credit unions are associated with the 2,900. In addition, commercial and savings banks have lost a net of 7,460 full-time positions as of Q3 2025. So look, there's I don't know what's going on, but for me, there's a lot of downsizing, restructuring. Maybe occasionally I'll find a bank that's hiring, but what the frick is going on?
Dana, did you use AI to conduct
I
your
did.
research? Okay.
The first one was from Brain Analytics, and the other one was from Business Wire. I love that. See, AI,
Well,
right? For me, it's easy, but I love when I do podcasts because doing statistics and stats is thought-provoking and it's worthy of a conversation. Why do you get on my butt? Why do you do this?
So three of us have been in the business for twice as long as you have, and you've been in business for 17 years. Do the math. Long time.
Wait, hold on though.
Go ahead.
I love you so much. Shh. In 2008, I started my business, but I almost lost it because of everything what was happening.
Yeah.
And I created SBA professionals that were doing to do a contract basis, so that's what saved me. But look, I'm in recruiting. I have never seen this so much change. I'm sorry.
I think we have, meaning everything, it ebbs and flows. In 35 years, we've seen everything.
Right.
So this is not brand new. It's just the 2025 version.
I love you. But educate me on, so my experience has been 2008 and on. I've never seen this much change since 2008.
You weren't here in the 90s.
Yeah.
It'll come back. Everything does.
It's a cycle. We've seen it several times. I mean, I used to say this routinely. If you were to take a look at the top 5 lenders of my firm from 1995 to 2000, and you looked at that versus 2000, 2005, three or four of those five wouldn't even be there anymore because they would have been merged out of business, who knows? And every 5 years, and I didn't know this at the beginning, I learned it over time. And so you got to load and reload and reload and reload all the time because you don't know who's going to be in the business or not and why. It could be market conditions. It could be, the SBA, gave them the death penalty. Who knows? There's a lot of things that go on and you have to be prepared for that. So it's cyclical. What's unique now that wasn't before was some of the technology that exists. And that's what makes this a little bit unpredictable.
Everything happens faster now.
It does. And you have to be so able to pivot and pivot intelligently. One of the reasons the three people here on sharing the screen with you have existed in this business as long as we have is that we've learned to pivot intelligently. But we used to be able to take time to think and pivot. Now we have to pivot and think almost simultaneously. And that's really a challenge. I'll tell you, my two cents on this is, I've already given you 2 cents. Let's make it a nickel.
It's good because pennies aren't worth anything anymore.
Yeah, right.
No, actually, I feel like 25 cents because of the inflation, but go ahead.
We have to change that cliche. Nobody under 30 is going to know what that means.
No, they don't.
So
you went to a movie for $1, right?
right? And sit in the smoking section.
Yeah.
There are more efficiencies now. So whereas before you maybe needed 8 closers, now you don't.
But wait, there's so much talent out there. You can get those closers. Like
you can, but also what's happened, and you and I have kind of had sidebar conversations a little bit about this, but a lot of the lenders, like my role and the role of firms like mine have changed a lot over the last several years. We used to get a lot more of the deal. The deal would be internally closed. We would partner with the closers and close the deal. Lenders have come to realize that they don't need, for economic purposes, the same volume of closers to get the same volume of work done. They're just simply outsourcing it to the law firms. And so if you have, and closer salaries internally, as you know better than anybody on this screen, have gone up a lot over the last, I don't know what, 5, 6 years. So if you're a bank and you're looking at your SBA division and you're running numbers and it costs you X amount of dollars for 8, so 8 times X equals Y. Now you could do 4 times X and save some money, and we'll just have, Fogel Law Group or ABC Law Group close those deals for us. They're charging about the same thing. The borrowers are paying most of the closing expenses anyway and fees anyway. We don't have to have this overhead added. We don't have to worry about people calling in sick. We don't have to worry about somebody, taking their dog to the vet. We'll just outsource it and let that become the Fogel Law Group's problem. So I have actually, as they've decreased their number of people that work for them, I've increased the number of people that work for me. So, in a world that has talent available for me and firms like mine, it's a bit of a boon because it's hard to find people that can even spell SBA, let alone even work with SBA. And so, yes, so that's kind of where there's been a pivoting of what's going on. And that's kind of true in a lot of industries, right? But I think it's very true in our industry. And I would tell you, it's not going to go back anytime soon.
Wait, what do you mean stop? What do you mean by that? I'm not sure.
Well, I think outsourcing is the next topic.
Yeah.
Well,
no, women is the next topic. No, we're not going there yet.
one thing about this that I wanted to mention, after the pandemic, there were a lot of people that didn't have anything to do with SBA that said, oh, wait a second, this SBA is pretty cool. We should get into it. And all of a sudden you have, SBA's tallied these statistics, and I'm all for new SBA lenders, but we had a lot of new participant lenders pop up on the scenes after the pandemic. And what they did is they made SBA staff scarce. And many of them got into the business and found out it's not as easy as it appears on paper. It's not like a PPP loan where you have a simple one-page application with signature page on the second page. They got into it. They realized that it takes good human resources. It takes a commitment to IT resources to be an effective SBA lender. So they jumped into it and they're like 2 years down the road saying, oh, wait a second, we don't really know what we're doing. I think we've seen people get into the SBA lending game that, woke up 2 or 3 years down the road and said, this is not really working for us. So some of the closures that I've seen have been and some of them, guys, have been significant institutions who got into PPP and said, oh, well, we ought to do some SBA loans. And they built an SBA division and they woke up 2 or 3 years later and said, oh, this is not working. So we're going to cut it. So, I mean, I think we had this flurry of hiring by various people, thinned out the numbers, and now, now we have a gush of SBA professionals out there as a result of that. And I could be wrong, but that's my thought.
No,
That's a good thought.
I kind of agree with you, but here's a conundrum, right? So there's been a lot of lenders recently that have laid off maybe 10% of their staff, right? Why is it that SBA lenders, I'm going to put it out there, maybe controversial, whatever, but why is it that they lay off, like Bay First, right? They laid off their whole entire, first their small balance program, right? And then Fifth Third laid off the entire closing staff, but then they're rehiring people. What is that? What is that? What's happening? Again, sorry, Ken. I'm new to this. I'm sorry. Yeah, no.
No. I call it reactionary. That's
Well,
what
do you mean?
happens. They just
why
react
would-
too quickly.
React to what though? Why would they fire
It'd
half
be
of
like a
their
lender
staff?
saying, "Oh, my loan volume was low last year, so I'm going to cut people." And then all of a sudden, "Oh, well, we have a higher loan volume. Well, let's hire people." You got to think to the future and plan.
Yeah.
But why would they fire half the staff and then 3 months later, oh, I'm hiring again? Yay! Nah.
I just speculate. I'm speculating, but I think about Bay First. They had a pretty good, successful
They
7A
did.
lending
That's
program.
my
And
questioning, right?
then they dove into the small balance loan program, and that didn't work for them. I mean, that's my personal opinion. So they got rid of their small balance loan crew, staff, team. Those people may not have been suited for their 7A side. And so they're hiring a different type of SBA team member. I may be wrong, but I'm just saying they got rid of one group and they have some additional resources, it seems like. So they're going to bring some strong people onto their 7A side.
Right.
Like I said,
Let me make it more specific. Ready? A top 5 SBA lender let go of, and having nothing to do with you guys, let go of 50 people. 50. And now they're hiring new people. That's what I don't understand. I don't get it. They let go of 50 people. That was 25% of their staff. Why would they let go of people 2 months later, hire new people?
I can only speculate and think that a combination of things. Per Ken's comment, knee-jerk overreaction, and they have to fix it. Per Lance's comment, recognize the weakest links of their chain and saw opportunities to bring in stronger links with these new people, be it experienced SBA talent or people who just have certain life skills and experience who they felt they could plug in somewhere and get a better result than what they had, and still net with, maybe a net 25 person labor force reduction. Or maybe, in those 3 to 4 to 5 months, they just, went from 6 to 3 to back to 6 loan officers. And they ended up with a loan officer that, one of those loan officers is a 30, 40, $50 million a year person.
Yeah.
And, you got to have several people to keep that man or woman BDO happy, or they're going to go somewhere else.
one of the things I was going to share with you, based on phone conversations I've had, of course, SBA lending is record numbers. and it continues to produce significant numbers. But I'm hearing stories about other large organizations looking at considering getting into SBA lending. I've gotten several phone calls over the last 2 or 3 months from people that were wanting to pick my brain about how to get into SBA lending. So we may have some people reducing staff, reorganizing staff, but we also have a significant number of people looking at getting into the game.
Oh, so then maybe those people should be talking to me, Lance, because maybe I'm the expert in like, I don't know, like starting a program, but that's fine.
I'm going to make one other observation too, just in my life experience, and particularly most recently. And this is going to make a lot of sense, but maybe people haven't really thought about it as much as they should. When the three gentlemen on here got into SBA lending, it was a very different animal than it is today. It was hair salons and body shops, and the average deal size was $300,000.
Wow.
I mean, it was a very different world. And we all read, I'm sure, through about 9 different sources that, Congress passed the latest and the greatest, blowing it up to $10 million. Well, if you think that's where this ends, you're dead wrong, because that's just that's the first hole in the dike. And then the next one will be all 7A loans will be of a higher value.
Yeah.
And then 504s will have their impact and blah, blah, blah. So here's the thing. You've got a workforce of traditionally trained, I want to be polite about this.
Experienced SBA experts.
Yeah, when you get to deal, when you have Sally Seller selling, their little business, mom and pop business, to Billy Buyer, and it's a one buyer, with one, if you will, a buying company, 1 or 2 guarantors, 1 seller. It's a pretty routine deal. You can do that stuff blindfolded if you've done enough SBA lending in a year or two. But when you get into like partial ownership purchases, and you get into other sophisticated deals that fit in that 5, 7, 8, 10, 15, $20 million space, and we're seeing loans that are $20 million, right? $5 million 7A, $5 million pari passu conventional, a $500,000, $800,000 line of credit, 3 or 4 million seller financing, and $3 or $4 million that the injection. And you're sitting there at like $17, $18 million. Most closers that work in this industry have zero experience with deals like that. The level of sophistication is a much higher. So you have to have internal closers that have a skill set ability to do this, or you got to hire counsel that has the ability to do this. And I'm going to swing us back to Lance's comment, which is that, and actually everybody touched on this at a certain point, man, when you start looking at SBA loans that are 5 million with guarantees that are 3.75 million, or I'll even just for hypothetical purposes, take a $10 million loan with a 7.5 million, and your business is one that sells these loans in the secondary market. That's real money.
Yeah.
It's exciting. It's who doesn't want to be part of that? Who wants to do a deal that's a $500,000 deal where you're selling a $375,000 SBA loan in the secondary market? The energy level, the human resources, all the stuff it takes to make money on that is the margins are much less. But when you get to a bigger number, they're much bigger. And so you're going to have people that want to play ball in our sandbox that never ever wanted to be in this sandbox, and they're not ready for it. They're not ready for it from the perspective of what they need to do to make it SBA compliant and eligible and close deals that are not easy and still keep their guarantee. And staff isn't trained for that yet.
Yeah.
The larger you get, the more complicated sometimes it is, and the more sophistication you need.
Right? I knew that, dog.
That's kind of what he was saying. He just threw a lot of words in.
Well, I think
I got to say, this is the only podcast I have done where I speak the least, because my esteemed colleagues are as knowledgeable and as old or older than me. whether it's by a day and a year or not.
Maybe a year or two. But I was
Okay.
thinking back when Mitch was talking about, and Ken, you were talking about this, the old days. I remember in 1985, guys, I put together an $8 million year in 7A, and I had $3 million in 504 loans. Back then, that was huge. I mean, that's like a 60, 70, $80 million year now. Things have changed. The complexities changed. I mean, my loans back in the 80s and 90s consisted of exactly what you guys said. I had somebody who owned one gas station.
Wow.
And the ownership structure, I had a convenience store, guys, in the 80s that was a sole proprietor, get an SBA loan. Now, when you get a convenience store deal, they have 6 affiliates, 7 partners, and 12 however many locations. So the complexity changes quite a bit as the size of the loans go up. And these $10 million manufacturing loans, SBA really hasn't been in the manufacturing game. Now I think they will be
You think so?
because $5 million wouldn't do anything for a manufacturer, even a small manufacturer. I think $10 million. I was talking to a BDO the other day, and I directed them to a economic development agency. I said who what in that particular state was the manufacturing economic development group. I was like, you got to go get the list of all these people and start calling them now because suddenly SBA is in manufacturing lending with a $10 million limit.
So that kind of goes to the other side of, look, I'm going to pick your brain because I have all three of you here. Staffing. In 2026, a lot of the banks are doing their budgets. What do you think lenders are going to need? Whether it's AI proficient, videos that source a whole bunch of stuff. So it goes from videos to closing. What do you think in between are the three significant positions that lenders are going to look for?
I think with the new change in the with the new manufacturing program that's coming, and Mitch is right. I think an increase in the 7A size is right around the corner. And that also will facilitate larger 504 loans. But with that, I think you're going to see a lot of demand for BDOs with industry specific, for instance, somebody who'd worked in the manufacturing space.
Okay, let me just give you an idea from a recruiting perspective of what recruiting a BDO with franchise experience or whatever.
Bang your head against the wall.
Yes, it is a very good talent of how BDOs are very challenging, very thought-provoking, very storytelling, right? So when I feel like if I can get a referral, like Ken, if I see somebody, I'm sorry, in Hawaii, I'm gonna call you and to be like, yes, right? Don't you think that's gonna be like even your space, right? 504?
I don't think that, I think
Or
504,
actually in general,
we're
right?
expanding, but I don't think BDOs is where the need is. I think back office is where the need is. Processing, underwriting, closing. There's
Yeah.
plenty of BDOs out there, and the
But
business comes from all different
Well,
sources. It's finding the right source. There's enough people, just got to find the right source. So will it come from a loan broker? Will it come from the manufacturing industry? There's enough BDOs. They just need to focus correctly.
oh, I have
yeah.
an idea. Can I ask you guys, all three of you, a question? So I've had a couple of clients that have a head of an SBA department, and the structure or model is where they pay, where they have like a line of brokers, and they pay a broker, let's just say 1% on the first 5 million. And if the broker gives them set 10 million, 2 points, and then we'll just say anything over about 15, 3 points. Do you think that will eliminate not eliminate, do you think that's a better model than a BDO model? Over here in New Jersey, there was a man, he passed away, Arnie Horvath, who structured his department where it was all brokers. And he had liaisons of SBA professionals, and all they did was pay 2 to 3%. Do you think that
You
could be a
still
model?
need, whether you call it a BDO or a loan officer or whatever,
No, the
they
liaison.
gotta, whoever gets that intake has to know what they're doing.
It has to be able to take care of
But
it.
Because there's
that's
a
what
lot of garbage that's thrown against the wall by loan brokers. So
but
you
that
have to filter through them and find the diamonds in the rough.
I get it, but the liaison, the person is a hybrid, right? Credit trained, knows operations, and they're far and few between. And banks pay them like let's just say $1.50, right? And they're the
Yeah.
relationship manager. Do you think that could be a better model than doing a national platform for BDOs?
That's a hard question. It's a
Yeah.
real hard.
Good question.
The-
I mean,
I'm so
I'll
on
tell you
fire,
that I
man.
can tell you
But
from
yeah,
I can tell you from our experience from the
please.
front end. So I cover the entire country,
I know you do.
Yeah.
and I'm it. Now I have a BDA and assistant, but with the two of us, we cover the entire country. We work with every community bank in the United States, every credit union in the United States, every loan broker in the United States, every real estate broker in the United
I
States.
get
There's
it. We get
thousands,
it. Okay,
right?
fine,
Okay.
fine, fine.
So you don't necessarily have to have 50 BDOs.
No.
It's a model. Our model is we're wholesale, so we take it and we got to filter through and figure out which one of these is going to work or not. There's not a right or wrong answer. It's just what works for your institution.
I guess what I'm seeing lately is that model, and it's been working, where you hire credit trained SBA professionals, 20 years in the business, and you pay the broker 2 or 3 points, and this liaison takes over the relationship where you have brokers lined up, but you have a liaison, like 4 or 5 liaisons, and they take over the relationship, and there's
Who
three.
manages the retail process in that scenario?
The
Who's
liaison.
so they're dealing with the individual borrower
Yes.
in that scenario?
Yes. So the broker will
So,
do a full write-up, hand it over to the liaison, and the liaison, again, credit trained, but also has again a hybrid of skill set. But that's what I've been seeing lately, and it doesn't need to say like I agree with you where you don't have to have like 50 BDOs, but is that a good model?
Did you say the broker does the write-up?
The good brokers, yes, they do.
Oof. So to me,
okay,
that's
so
scary.
Yeah.
so that I'm listening closely, and this is what I heard Dana say. This is my takeaway. Firm gets rid of all of its, traditional BDOs.
Yes,
We have these liaisons who essentially know enough about SBA lending, but
yes,
they're not BDOs. They're just like, BDO, they're knowledgeable people that know how the process works, know how the back office works, can kind of be a
yes,
concierge to the experience as well as connecting with law firms and whoever else.
exactly.
And they have partnerships, and I'm using the word partnership kind of loosely, with very successful brokers in verticals that will send enough work to the lender to make
Yes,
this make sense.
yes.
All right. Again, lawyer hat. Okay. So here's the thing. Ken hit
Wait,
one of the nails on the
can
head
I
that I saw,
wait, is this
which
the
is
lawyer hat? Or like no?
no, that would be the recruiter hat.
Damn it.
Um,
I'm sorry. Go ahead.
so,
Sense of humor. Sorry.
this just reeks of tremendous conflict of interest to me. I mean, it's like I can smell it all the way from New Jersey here. It's like really, really a dangerous game to play. Where's the accountability? And in a lot of states, when you're a broker, you're no longer a buyer's broker or a seller's broker. You're the transactional broker. Yeah, you're supposed to disclose it. Yeah, you have to have people sign off on it. Is it done? Is it enforced? Blah, blah, blah. At the end of the day, humans being what humans are in a culture like we have in our country where everything is driven by the almighty dollar and how much you can grab and earn, are you really going to believe a process where you have these brokers who are not there's a relationship, but they're not employees, right? To you. So the
What are they incentivized
accountability,
by?
yeah, and they're incentivized by, yeah, the almighty 2 cents or a penny. So at this point, and where's the loyalty, right? I mean, they'll just, if you don't do the deal, they're going to go to the next guy. But and then your model is, wait just a second, I built out my whole thing because you're going to send me all your convenience store deals. And then the broker says, but yeah, but you didn't close the last two of the last five that I did. And the lender goes, yeah, because they were lousy deals. Well, I got somebody else to close them. So guess what? I'm moving my business now to them. So I think it's a really bad model.
But that's been the forward moving within the last 3 months of all the downsizing, of all the restructuring of how I've seen.
Remember how we talked about the ebbs and flows and how it changes? It's just the current fad.
Yeah, it's just kind of something.
It's the current fad.
I'm sorry.
Yeah.
Ken. I'm sorry.
It's the pet rock of the 2020.
But so like though, like
Yeah,
so this is good because I haven't seen this flow, right? And so for me, like I'm not young, I'm 52, but this is what the trend is happening. And so I guess, look, I'm not that much older than you guys, but it kind of scares me that that's happening because it eliminates a lot of jobs. But
First of all, you're younger than us. No, no.
Not older.
I'm sorry, yeah, I get it. Sorry.
Second of all, it will come, it will come and go. But let's just say the model worked. Then your institution has a lot of volume. You still need to process, underwrite, and fund it. So you still need people.
Yeah, you still have to have the people.
But I think, like Mitch said, you need responsible people in the front end that have a conscience and process or take in deals that are good deals for your institution, not just because they're going to get paid 1, 2, 3 points.
I love
Yeah,
that.
that's great. I wish this had happened back when I was producing. Because I had my calculator up, Dana, when you were telling me the percentages, and I used to crank out 30
Did you
to
use one of
40
these?
million dollars a year in SBA loans. Yeah, I love Ken. I've got one somewhere in my drawer, but
Nice.
I looked at back in 2009, I did 40 million. I was way underpaid during that year.
I think everybody, it's ebbs and flows, right? So
Oh yeah.
again, I'm sorry, I'm a little younger than you guys. So during the pandemic, the salaries went from here, and now they're going from here. And so definitely like a lot of professionals are I don't want to say settling, but they're coming to the reality of what's happening, I guess, in the business right now. But, hey, look to you for that 10 ebbs and flows, right? And so that's what's
That
happening right now. So,
Dana, I'll tell you a story from 2008 since you mentioned 2008. And this kind of ties in with Mitch and Ken's comments. In 2008, I was market executive for a bank. And one Friday afternoon, I'd worked for that bank for about 6 months. I hadn't taken a day off. I went home to mow the yard. And I got a call from the bank, and they said a big black SUV pulled in. It was the FDIC closing the bank that I worked at. And I guess the great thing about that in the story, I saw a lot of my friends lose their executive level positions in banking, and they were not willing to pivot. They were not willing to change. And many of those people are no longer in banking. Some took several steps back, where I went to work for the FDIC that day, which kind of catapulted and helped me, something that was bad, I was willing to pivot. And I think that's what you have to look at now. And people who may have lost their position at SBA Lending Group, they're going to have to rethink how they do things, rethink what they're doing to be, and it long term could result in fantastic things for that individual. But at that point in my career in 2008, had I sat back and said, no, I'm not going to do anything but be market president of a bank, I probably would not be where I am today had I not been willing to consider the FDIC guy that gave me a card and said, hey, Lance, go to work for Deloitte, closing banks and managing SBA portfolios.
Lance, are you saying you thought outside the box?
Completely outside of the box, Ken, and I know you do
Interesting.
too. Yeah.
Stop it. Stop. Don't it
Ken
don't
and I
Ken,
always Ken and I always like to think in the box, but we get out of the box frequently.
Ken just he just
And
doesn't,
around the box.
you don't play in a box. Like that's the thing, right?
No, we do. No.
We
No,
do.
he doesn't. He doesn't. But I know we're talking about like a lot of stuff, so I want to move on to the next question, which is women own almost 40% of US small businesses, but they only receive about 20% of SBA volume. That's one stat. And then another one is in 2023, loans under 7A and 504 programs, the majority of the women reached 51 billion, about a 21.3 total of SBA's lending that year. 3. The 21.3% share is up from 15, actually, yeah, that's good, 15.6%, which is a 70% increase in loan volume to women. However, when women go to borrow money, there's only about a 26% rate of what they're not getting. So basically about if a woman-owned business, 42% if they go to a higher borrower, like a higher, like if they want to do like 3.5%, they'll get a lower approval rate. So there's definitely a gap in that. And so I guess I want to throw it to you guys and say, where's the disconnect? Do you guys think that women have a fair shot of getting what they're deserved, or what needs to be changed? Because there's definitely like, so the bottom line is when they go to borrow money, they borrow money, but they only get approved for a less amount.
Hmm.
That's
Well,
bullshit. Oh my
just
God.
right out of the bat, I don't think any SBA participant lender looks at a borrower and says, "Oh, you're in this category, so I'm going to make a lesser loan." The financial information, the project, what they're doing is what's important. Where I think we're missing the boat, guys, is SBA used to have a lot of women on owned business advocacy efforts. They had the women-owned business centers, which were like small business development centers to help encourage and motivate female entrepreneurs. There used to be a loan program in SBA many years ago specifically for female entrepreneurs. And
Well,
we haven't seen that in years.
so like Lance, I've had Stephanie on my podcast like 7 million times.
Yeah.
And so I just really feel like there's a gap between women entrepreneurs and them not getting the approval rate that what they deserve. So what's
Where are
happening?
these statistics from?
They are from Business Wire and they are from the SBA.
You know what's interesting to me when you read those, and I'm certainly not privy to any of that information. I couldn't even form an opinion. As a man with two intelligent and productive daughters, I would find that to be very disappointing,
Yeah.
and discouraging. But one thing I've noticed, I've been doing SBA lending for 31 years, and I have been going to NAGLE meetings for 25 or 6 years.
Right.
One of the things that struck me first and has never ended, and in fact may even be more so now than it was 20, 25 years ago, is the volume of intelligent,
I
hardworking,
love that. Thank you. Yes, I love that.
sophisticated, direct, no nonsense women in this industry.
Absolutely.
Some of whom and I mean this with love, and they know who they are if they watch this video because I've used this term with them many times, although some have retired and some are currently, winding down. But I used to call them the SBA divas. And I meant that with love because they were omnipotent. They just knew it all. They could do it all. They were smart. They experienced, and they're still there. And I know Lance and Ken probably are seeing their faces in their heads because these women were everything. And so the women representation within our industry is extraordinary, number one. And their leadership in our industry is extraordinary 10x.
Yeah.
In fact, when I was learning how to do this business,
Who's the head of 504 at SBA?
oh, look at that. Who's
Happens to be a woman.
who's been among the leadership in Nagel? Okay, who's been on that panel? Who's leading the show and everything else? I remember when I was learning how to do this business, and I'll give a shout out to Cheryl Stockton, who has retired, sat for the
He was
industry.
president of NATCO. Woman.
Yes. So what you're saying, if those statistics are in fact spot on, then there is a huge disconnect and it needs to be fixed. But I don't really know what that is. But I'll say this: nothing happens overnight. It takes time. Women haven't typically owned businesses, I'm guessing, in large volume until the last 20 to 30 years. So if you were to go back, I would have to guess. This is not me opining based upon any metrics that I'm aware of, but
Ask
just
AI, it'll tell you that, though.
yes, it would. So look that up, will you, please, Ken? I would venture to say that, women-owned businesses were in the single digits in the 70s, probably approached, 10 to 15% at some point, 20 to 30%. I don't even know what they are now, but I will say a lot of deals in my experience.
1970, 4.6 to 5% of all businesses.
Are you
How much?
serious?
4.6 to 5% per AI.
Of what? Women or
Wait a minute,
businesses or women?
Yeah.
Now, that's all businesses. So that could include, businesses doing $200 million a year, not small businesses.
Right,
But,
according to AI.
so the
And
statistic
now it's 39 to 42%
Yeah.
Today?
today.
yeah, 39
We're-
so 39 to 40% of that's what I read to you earlier. So
Yes, no, that's
I just
fine.
looked up at AI. I was just saying.
What,
why
Ken,
don't you show me up, Ken? Like what are you doing?
Ken-
What are you doing?
Ken, the first
Proving
number
his
you
point.
gave, the first number you gave of 4.9, when was that from?
Yeah.
What year?
1970.
Fine, perfect. Then you just made my case.
I
So
just made your point, right?
I just
everything.
read that.
Yes, and you get credit for that. Okay, you get a star. I'll send you your star when we get off
No,
the phone.
you know what? No.
It's going to be a Jewish
Him
star.
and I. It's him and I. Like, no, man.
It's
Like,
pointed.
nah.
My just to wrap up my thoughts on this, it'll take some time.
Yeah.
It'll take some time. I would say this, listen, my oldest daughter works in finance in New York. She is frequently the only woman in the room, on the call, on the project, and she's 31 years old. Okay. There are others there periodically, but I'm amazed that at this point, at the level that she's working with these guys who are incredibly successful entrepreneurs and captains of industry, there are very few women involved. Come see me 25 years from now when my kid's in her 50s, if I'm still alive, and she will be one of many because the women that have got will create this opportunity for themselves. So it's a matter of time. That's all. So I think the disconnect is really just, chronologic. It's
So,
not
Mitch,
intentional.
I just asked AI how many in 10 years ago, in 2015, and the answer is 20%.
Oh, wait,
There you
hold
go.
on. So, like, you guys.
It's doubled.
So
10
I
years.
have, like, I love this that I have all of you on my panel, but in our industry, it's a male-dominated industry. And for me as a woman, sometimes
There's a lot
I
of.
feel.
I think the women are growing in this industry, though.
I'm talking.
Well, what's male
hold on, wait,
dominated?
hold on. Let me specifically get
SBA
to this.
lending?
No, so recruiters, right? Like today, ready? So I had a bank that wanted a 6-month guarantee when all of you know, like industry standard is 3 months. So that was coming from me. And then I spoke to my counterpart who works with the same bank, who is a man, a guy who I love, 3 months. So why is it that because I'm a woman recruiter, that they ask me for 6, but then they go to him for 3? What do you guys think?
That's person specific
Yeah.
You think
to
so?
me.
It's like the SBA lending industry. I don't think anybody that's processing SBA loans, originating, underwriting, closing SBA loans, looks at the sex of the applicant as something that is going to help them make a yes decision.
Okay.
I think the project, the financials, the information is more important. Um, I can concur, guys, when I first started working in the SBA industry, and I remember SBA loans were all direct back then, and I would take an application. Everybody that worked in the SBA office was male.
Yes.
However, Ken started making beautiful points. Who's head of 504? Linda. Who's head of NADCO? I mean, when you see a Nagel training, there are several very strong, and you mentioned Stephanie. Stephanie's a rock star.
She is
Uh,
like, you know what? We have the same tattoo, which I didn't tell her yet, but
but my point is, we're seeing like Mitch said, significant growth in people that are not only working in the industry, but over time, we're going to see significant growth in the loans to female entrepreneurs. But I still go back to my original comment. I think SBA needs to step up its advocacy game for female entrepreneurs.
I
I
agree.
really do.
I agree. I was just actually, you know what? I have three, probably the most smartest people that I've ever really had. When I went to Nagel, Mitch, and I had dinner with you and Ken,
Hmm.
man, I love that. You know what? And I feel like I could be with myself, and then like you guys are gonna tell me the truth, right? And I love that.
To your point, Dana, I don't. I think most people in my age, in my generation, a little bit younger, we don't see gender. Some of us do, but most of us don't because we grew up where there was women in our high school classes, in our college classes, and our law school classes that were every bit as productive, smart, accomplished, energetic, and then graduated. And listen, my law school class, I think was 54% women. And that was 1984 to 87. And that was in those 3 years when law schools began to move to be actually many of them majority women over men. That had never happened before. If you had gone to these law schools 10 or 20 years earlier, it would have been, 5 or 10% women. You go back and look at the 1950s or 1960s, and if you saw, I forgot the Ruth Bader Ginsburg, right? She
Yeah.
was one of two women in the Harvard class of 1956 or whatever it was. And so it goes to show you how things have changed. So the leadership of any industry in this country that's older than 60 in their 70s or 80s grew up with a different setting than they do now. People that are younger than we are grew up with an even greater equality than we've seen. So I'm going to circle way back to Lance's point. I think they look at the deal and they just basically look at the deal and make the deal decision based on the metrics and the information on the deal. The simplicity of this is it's not rocket science. It's just that women only until now, per your comment and Ken's, they've only just recently hit 40%, which means maybe as recently as I think Ken said 10 years ago, they were 20%, Ken. So
Right.
maybe you hit
Very
30% 5 years ago. Well,
Yeah.
that's a big
1990 something, what? Right, Ken? What was
and
Yeah.
and a lot of those and then the numbers you're looking at that Ken's like to my earlier comment was I don't know if Ken's very quickly researched information is small business or any business number one. Number two, a lot of those businesses will never need a loan, or if they need a loan, they're not going to be able to need or get or qualify for an SBA loan because they won't be in something that's SBA lendable, or they won't be
Yeah.
around long enough or have the type of business that is so you can't possibly make a lot of sense out of all that data, but I'd be willing to bet all the money that Ken has that 10 years from now, both
The
dollars.
2 cents?
There's-
No, it's just
that-
$1. Stop.
Yeah, then that in fact, if we do this podcast in 20 years, we're going to be the ones going, "What the heck? Why
Wait,
can't
no,
you
we're gonna be like this.
get a loan anymore?"
Yeah,
It's going to be
I'll be coming
80%
in.
women dominated.
I'll be hobbling in on my walker
That's
for
right.
the 20-year.
With the
Yeah,
walk.
but I think one of the things that will improve those numbers, like I said, they used to have women business centers. SBA did. That got eliminated. Well, that helped them develop their business concept, help them develop their business plan, and help female entrepreneurs to be ready for an SBA loan.
Okay, so we covered business and women. So the last question, which is so fun, is what's the biggest lesson you've learned this year, and how do you think it's shaping the way for your approach until next year?
I got three big takeaways because while a lot of people work in origination, closing, I also do servicing and guarantee purchase packages.
I've heard you taking
And
over 4 roles, right?
I'm helping lead several different parts of the organization,
That's so
but
crazy. How do you do it? How do you manage like 4 different directions?
right now, scratch pads. There's 3 lessons to be learned from the guarantee purchases that I've seen over the last 2 years. And the only reason I bring this up is it's good for everybody to hear this. And in my organization, I had a young person. I had to have a young person do this because they had better technology skills than I collect data points off of liquidation projects. And we came up with a determination of, what types of businesses were failing, what, were the problems. But the 3 big takeaways for SBA lenders from this year and the previous couple years were please make sure when you're underwriting a loan that you give the borrower adequate working capital, because we may not ever experience a historic interest rate rise like we did in the recent past. But part of the problems with businesses that failed is when I go back and look at the credit memo from when the loan was closed, they didn't get enough working capital. So, and in the SOP, it specifically states, when you check the box in E-Tran that says you're willing to submit for an approval, you're stating that you reviewed it and they have enough working capital to successfully operate that business. And sometimes lenders are afraid to provide an adequate level of working capital. Many businesses that went into liquidation might not have had they had adequate working capital. The other thing is we're in this golden age of business acquisition.
Mm.
Biggest sticking point for me when I'm looking at loans that did not survive and so that did go in liquidation. I go back and look at the experience of the borrower who was purchasing that business. And I always like to tell this story. My brother's been in the furniture business for 35 years. Let's just say somebody was going to buy his business. For an SBA lender to think that the new buyer can do the same level of revenue, can manage expenses as well as he does, that's ridiculous.
I've heard that so many
Absolutely.
times, right?
Yeah, that's absolutely ridiculous. So on business acquisition loans, we have to look harder at that old document called the resume that that a lot of people have forgotten about, but we have to look at what the experience and education of the borrower is and make sure that they can actually operate that business. My final thought, do not put things in the credit memorandum that are contrary to what SBA SOP 5010-8 requires. I've seen many a deal die. One of the beautiful things, just an example, landlord waivers. The SOP 5010-8 says unless leasehold improvements are $500,000 on the loan or 30% of the total loan or 30% or more of the collateral is leasehold improvements, you don't have to have a landlord waiver. You don't have to have an assignment of lease. While it might be a best practice, I've seen deals fall apart because the landlord was being ridiculous in negotiations of the landlord waiver. But then I go back and I'm looking, and leasehold improvements are only 15% of the deal.
Wow.
So I mean, I guess my point is brush up on the SOP 5010A and make sure you're not having requirements added to an SBA loan that are not required. But
Interesting.
those are my big three takeaways.
No, that's not only fair, it's incredibly practical. I hate to do this, but I'm going to circle back to AI. And I'm doing that because, one of the things that experienced closers and leaders within the organization and counsel who you engage bring to the table is looking at the entirety of the loan, what's required, what the collateral is, and to what extent you're going to allow a modification of a landlord waiver or subordination to be. How far is this going to go? Do you really need it? Do you don't need it? And why do you need it? Or why are you willing to accept what would be a modified landlord waiver to get the deal closed? Could you, when confronted with an SBA who's, offering you a repair or denial, do you have a case to make where, hey, you used good business judgment and you decided that, you know what, we don't need a landlord waiver in this particular case. Don't make a big deal about it. All you had in there were tables, desks, and chairs. So if I liquidated them, they'd be worth, $6.45. So at the end of the day, that's where this is really germane and very, very important to have. I just wanted to add that part because Lance had kind of brought that up in the course of the conversation. AI is never going to be able to do that for you. It's just not, because it can't.
They're not.
You take all those moving parts and tie it together.
There's a lot of moving parts, but I think that AI has things like kind of like what you all have said that it just can't do it.
I didn't respond to the lessons learned part. I don't know, Ken didn't really either. Lance did offer his. I'll be very brief with mine, which may sound like an impossibility for me, but I'm going to do that.
We have editing. It's so fine. Don't worry
it is an
about
impossibility, but it's okay.
Go for it, man.
We love you anyway.
Do it.
So here's my take on what I've learned. What I've learned is that there's still a lot to learn about where this industry is going. And a lot of that kind of circles back to the increase in, first of all, bringing in manufacturing, right? Wasn't there. Usable. Now it is. Okay, great. Got to learn something different. Integrating other people, working with lenders of mine that for years had the same closers I've seen for 15, 20 years who are good at doing $800,000 business acquisitions and $500,000 working capital loans and, $1 million tenant improvement deals, but, cannot do a more sophisticated deal. And what I need to learn is to identify that earlier. What's also been very important is I have to educate my lenders. I had 2 conversations this morning with 2 different lenders who are doing more sophisticated, larger deals and still put in their commitment letters the same legal fee estimate and cost estimates that they were using in 2010 and 2012 and 14. And what they're not understanding is that labor costs a heck of a lot more today, as everybody on this call knows, than it did in 2010 and 12 and 14. The cost of running a business is a lot more. The time it takes to do these deals is a lot longer, and everything else is just more expensive. So they keep finding themselves in a situation where they're confronted, not so much with my firm because we've learned to get ahead of it, but they asked me questions. These are just educational calls. Like, why are legal fees so much more now than they used to be? Well, here's why. So can I give you a piece of advice? Yeah. Don't ask for a deposit of X amount. Ask for more. Don't put $5,000 in there for a $4.6 million 7A deal with 3 borrowers, 6 guarantors, and 5 pieces of ancillary collateral. That's not going to be a $5,000-$6,000 deal. And if you find somebody that'll do it for $5,000 or $6,000, don't use them because they don't know what they're doing. So at the end of the day, my job and what I've learned is that I've taught my staff this, there's certain hot points that you got to look for when you get engaged. And now more than ever, we need to look at them, see them, and get in on them early, because my job, as I see it, among my jobs, is to take a bit of a messy process that's got a lot of moving parts that's got a lot of pain points that by the time the deal gets to me, there's deal fatigue, there's the seller's pissed off, the borrower's pissed off, the closers are exhausted, the BDO's annoyed, blah, blah, blah. And all of a sudden, here comes Fogel on the scene, smiley, hey, let's get this deal closed.
I like the little Superman emoji, like, right?
Yeah, exactly. And people are like, who's this guy? And why does he want all this stuff? And I'm like, wait just a second, don't shoot the messenger. I'm just here to get you past the finish line. So my responsibility is to take all that stuff and make it as forgettable as possible and make the closing experience the best it can possibly be so that everybody forgives and forgets all the ugly that took place before that. And the best way for me to do that is to know what I'm doing, train my people to know what they're doing, and to make sure that we look at these deals the minute we get them and deal directly with our clients to make sure that they know what to expect. I still get credit memos that don't match commitment letters. I used to get credit memos that don't match commitment letters that don't match SBA authorizations. But since we don't have those anymore, I can eliminate that. But now I just get credit memos that don't match commitment letters that don't match contracts. And so anyway, I've learned to be more proactive at the beginning and to be more verbal about it because it's not going to change. In fact, it's going to continue to get more complicated. And that's my job. So that's what I learned this year.
We live in an instant gratification society.
I agree with that. Like, I have no patience.
It is frustrating. During this podcast, I have somebody call, email, and text. I need to talk to you immediately. Like, really? Is it that important? I can't wait for 30 minutes. But my point is, people need now, immediate.
Yeah.
We need, and that's not going to change, unfortunately. So you just need to be able to take a deep breath and adjust to it.
So hard, though, right?
How I've done it, personally, how I do it is I communicate, like the person that called, emailed, and texted. During this, I pinged them back, said, I'm on a Zoom call. I'll get back to you. But I didn't ignore them.
Yeah.
And that's the thing that is so important. When people ignore and just don't get back to you, like, really, how hard is it to just send an email saying, I'll call you back?
5 seconds.
Right?
Yeah.
And people don't do it.
They don't do it.
I'm going to make an interesting observation too. So I've been in this for 30, 31 years. Lance, Ken, very long time. It wasn't like this in the first 10, 20 years.
Not at all.
We didn't have these either.
No, right? So, and when I speak to the young attorneys that work for me, they're like, how have you done this for 30 years at this pace? And I say to them, it wasn't like this in the 90s, in the early 2000s.
At this pace is the important part.
That's correct. So I'm going to go out and it'll be very interesting to track this as we all as we all are, using our canes and walkers to go from bingo to shuffleboard and
Mahjong, you got to bring it in. Mahjong.
And dinner at
beer
4:30, and dinner at 4:30 to see how many people can last for that long at this pace in this industry. I'll bet you a box of powdered donuts that there's no way you're going to have the nearly
Can
the
we up the
volume of
ante? Because I don't
people.
eat powdered donuts, but I agree with you 100%.
All right, what do you like? Chocolate covered donuts? Sardines? Gefilte fish. Gefilte fish.
Yeah.
So at the end of the day, you're going to see people who get in this industry in their 20s and 30s, and they are going to burn out by the time they're in their 40s. They're not going to make it even until their 50s unless they learn how to balance. That word balancing means something different today than it did last year and something different that it'll mean next year. Unless they learn how to balance the work-life needs that they have with their spouses, their children, their grandchildren, or whatever they got, their dog, their pet, their boat, their tennis racket, whatever, and they figure out how to do this and stay for it in the long run, which actually begs a whole nother question, which is if if guys like Lance and Mitch and Ken can stay in this business for 30 to 40 years, but the next generation of people can't make it past 20 to 25 years, what does that mean to this industry? What kind of
It's
leadership?
scary.
You're going to have a shortage of Kens and Mitches and Lances out there that have the sickle, for lack of a better word, the ability to share the knowledge, teach them, show them, be patient, and enhance and continue the legacy that was and is and should be the SBA lending world. I don't know what that looks like when, you're running at this pace. Like Lance said, record year, last year, almost record year, next year, another record year, new
Yeah.
deals, new volume, new amounts, record year, record year, record year, lack of training, lack of people, AI, and everything else. These people are going to flame out in 20 years.
Yeah.
What is this? What is this? What does the SBA industry look like? And I think there needs to be, I think there needs to be somebody paying attention to this who's in it.
Well, for
And
Dana, it means new blood. She needs to keep bringing in new people.
No,
Yeah.
yeah,
because
Well,
let me just give you an example today. So I had a regional bank that, look, I worked on this for 3 months, right? I gave them 8 qualified SBA underwriters, right? The first guy got a counteroffer, like common, right? But they hired a 30-year veteran. And I'm like, that's not what you wanted from me. Like, I was so like, well, one, I was great. Like, it just shows you how much experience that is appreciated by a regional bank, but that's not what they told me that they wanted, right?
yeah.
So there's still, I have to tell you though, in all of my searches, whatever, the experience, when I have a candidate that's more experienced, that's what lenders appreciate. I have to tell you. Yeah,
Yeah.
if I have like a 5 to 7 underwriter and then I tell them like I have a 15, 20, 25-year vet, they want to see the vet. So it's still there. It's still the spark and it's still the veterans that I think are, leading, not maybe not leading, but definitely taking the proactive motion of lenders that I see that are hiring that want the vet.
Yeah.
So,
yeah,
Well, one of the things what Mitch was talking about, and Ken and I, we've all been around each other for a while, but that's why I've been so active in training and I've been real active in trying to mentor young SBA lenders or talk kids who are coming out of college into considering the SBA field. Because it was probably about 10 years ago, I was sitting at an SBA conference and I was, sitting around a table. Ken, you may have been at that table. Chuck Evans, Mitch, you may have been. I don't remember who was there, but I was saying, in about 10 years, we're all going to be gone, or however many years that is. Who's going to take our place? I mean, we need to be developing, to Mitch's point, the SBA industry has to be developing that next group of leaders
they
that
are.
are,
I mean, but I'm sorry, not to cut you off, but they also, when they hire the vets, they also make sure that there's an equilibrium between a vet, a mid-level, and an entry level so that they're setting their staff up for the next steps. And when you find a lender like that in the back office, I'm talking about back office, closers, underwriters, servicers, those are the people that I love working with because they know what they're doing. Sorry.
but I'll tell you, 3 of my kids work in the industry.
I know we
And
talked about that doing a family episode. I love that.
they were all, as they grew up, saying, "Oh, I don't want to do what dad does. I don't want to do what dad does." My youngest daughter sat and had to listen to me do the SBA loan certification series course with Bob out in California for hours. And she said, I don't want to do it. Well, guess what she does?
Does
My
that?
middle daughter's same way. I have a son that's in the SBA industry, but long and short of it, I finally set them all down. I said, this is a great place to be. Come have fun with us.
I'm so glad, Lance, you're doing that. And I try very hard to do that in my space. Given the opportunity to train a closer, even at one of my clients, I try very hard to give them a little guidance and teach them and, teach the young people that are working for me, whether they're legal assistants or attorneys, to do these deals. Because I think it's very, very important. You're right. We are not going to be
You're
around.
not going to be, because here's my daughter. I say hi.
Hey,
Hello.
My kids have zero interest in this. They aren't touching it.
Do you want to do
So,
what I did?
Lance, I don't know how you did it, Lance, but God bless, man.
well, I got tickled. So Mitch, my middle daughter, when she came out of college, she came and worked at a bank I was at. She was not in the SBA area, but she was doing great. She got promoted 3 times in 2 years. And she said, one day she said, no, I don't want to do this anymore. So she went out and started a business. You know what changed her mind? When she turned 26. And suddenly she couldn't be on dad's insurance anymore. And that was not the deciding factor, but what happened to her, she realized that being at a bank was good, that she excelled at it. And, she came back to it and she's doing wonderful. But it's one of those things that's fun to watch when they constantly tell you, I don't want to do that. I don't want to do, and then they do it and they love it.
But that's
And
Yeah.
they're
kind of
good.
like Ella, who is 13. She sees what I do. I do the podcast, I do whatever. She's like, bruh, 6, 7, or like whatever. So, but every day I make sure she understands my job, because it's just her and I, right? As a single mom, you want to make sure that she sees me as independent and established, but there's also like that warmness, like even though she may not want to do what I do, I want to maintain that she, like Lance, right? With your kids, you want to do the right by them and understand, like, and teach them the little nuances of business as they grow up. So end result is that she probably will not do what I do, but she's super cute though, right?
Oh, absolutely.
Yeah.
Hey, guys, one of the proudest things in my career, my closer class, it's like 800 people over a period of years. And I do it with Bob. But I mean, I'm so excited. I'm hoping someday we hit 1,000.
I hope so too, but I really want to go to
Cool.
Hawaii. I'm like, oh no, let's go to Hawaii. But yeah,
We
maybe
can
next
do it
year.
at Ken's place.
Yeah.
I know. Happy New Year, guys!
Yes.
And
Happy New
thank you
Year.
thank you for participating with me in this video. Lance, Ken, Mitch, we're gonna do it again in 2026. I don't know what kind of topic, but we'll figure it out. But I love the experience that I had for the last 2 hours. I love your insights, and I love just really kind of like getting to know each of you at a different level. And this is why I do what I do. So thank you.
You do a great job. Happy New Year.
Happy New
Thanks,
Year, you
Dana.
guys.